What's up, my people? Welcome back to my channel. I remain your boy, your no skill FX. So today we'll be looking at an important topic in trading, which is the concept of mitigation block. Mitigation block is an important concept that we all need to pay attention to, irrespective of the strategies that you are using. Because you might be wondering, mitigation block, is it a new strategy? No, any strategy at all that you are using, you will need to pay attention to this mitigation block. All right, irrespective of your strategy, whether you are trading SMC, whether you're trading ICT, whether you're trading normal support and resistance, whether you are trading what is it called, supply and demand, most especially, it is very important that you pay attention to this concept. Okay, most of the time we are very interested in strategies that work and the backbone of every strategy we all boils down to you selecting a particular POI, because that is a region where you want to make an entry for. And when it comes to POIs, most of the time you will realize that some POIs will hold and some will not hold. And the reason why some of these things will happen is because you do not understand what mitigation blocks are. If you know this, it will probably increase the quality of the trade that you are taking. This is a fresh one, and it will be nice for us to pay attention to this concept so that we can increase the quality of the trade that we are going to take this month, and also increase our chances of making more profit. So if this is your first time of viewing my content, kindly make sure you subscribe to this channel. Share this video to others so that you can also help the YouTube algorithm to recommend this video to more people, so that you can also learn and increase their trading skill. So without further ado, let's dive into the chart, and then we'll look at what mitigation blocks are and how you can actually use them to improve the quality of your trade. So stay tuned, guys. So guys, in order for us to understand these concepts, I will be explaining it using a very simple term. Okay, so like I said, mitigation block is an important concept that will help you increase your chances of winning trade, and you need to know what they actually are. Okay, so now let's look at what a mitigation block is. Now, a mitigation block is a phenomenon in the market where price made an impulsive or significant move to either the upward or the downward direction, and then price tends to revisit that area again. Okay, that's just simply what a mitigation block represents. It is a phenomenon that occurs in the markets, and then this type of phenomenon, you will be able to identify a particular area where price actually creates a significant move and then tend to return back to that particular area. So it is not a coincidence that these things are happening. These are footprints that is being produced in the market, and this footprint can be the smart money traders or the big institutions. This is how retail trader can actually monitor what these guys are doing, because they are more like the people that actually controls how price is moving because of the volume of money that they generate in the market. So what do I mean by this definition? I will be using an illustration to actually help you understand this concept better. So suppose we have this candle. So suppose you have these candles produced on your chart. So this is a chart that is showing a sign of bullishness in the market. But one thing we notice around here is that price has taken out what? A previous high. Okay, price has taken out a previous high, which could be a buy side liquidity, right? And then price has given us a break of structure. But then the observation we are making here is we want to actually figure out where can we expect a mitigation block or an unmitigated block. Okay, so when you look at this area, after this bullish candle has been formed, which were actually the ones that causes this liquidity sweep, we see this massive push. Remember what the minute tells us, that there is an area where price did what? Made an impulsive or a significant move in the market. And as you can see, these are all huge momentum in the market, right? Price actually pushed all the way to this particular level, giving us a break of structure here, making this a valid order block. This particular candle here becomes our valid order block. Okay, let me change the color so that it will be easy for you to making this our valid order block. Now, as you can see, there is this volume that you can see. You see the move is not just type of consolidations that we normally see. These are just huge
push from this particular level. Now we have a valid order block. Now for this region, this area, or for this block to be a mitigated block, price needs to actually return back to visit this area. So for those who are smart money traders, or those who use smart money concept as their concept of trading, they may not be interested in making any trade entry until price return to this, mitigated this order block. The moment price tend to reversed from here to this block, we say that we have what? A mitigated block. Because then buy side liquidity has been taken, it has given us a break of structure signifying a possible reversal, and then we have a valid order block and price has returned back to it. So the moment price returned to it, this order block has turned to a mitigated block. That means that we can have a mitigated order block and we can have unmitigated order block. Now, what do you want to actually look out for? If you are looking out to make a trade entry, you need to do your analysis, and from your POI, what you need to do is to look out for an order block that price has not yet been mitigated. Okay, so the moment you're able to spot an order block that price has not mitigated, you can actually use that as your POI. And then the moment price retrace, just like you can see on the screen, the moment price retrace to this level, the next thing you want to wait for is a confirmation, and then you make your trade and you can make your trade entry from this block, and then expect price to push to the downward direction. So this is basically what a mitigated block represent. A mitigated block could be an order block that price has tend to visit again, but this thing can happen. It can be littered everywhere on the chart. You might understand it better just by this analogy, but then when you go to your chart, sometimes you might be confused. But for you to solve this confusion, what you just need to do is this: you need to pay attention to this impulsive move, this volume. It has to be very, very significant. It's not just it's not just any area on the chart. You need to look out for an area where these things are happening, where you can clearly see that move. This move, like I said, is not a coincidence. These are footprints of big institution or smart money traders that are actually, pumping money into the market, trying to take, stop losses and then continue in a desired direction. Because obviously there will be a lot of persons here that actually took a buy from here. Price will take this buy side liquidity, price will take sell side liquidity, couple of liquidity has been taken. So there is now a possibility for price to continue in a very good in your desired direction. But then because of the fact that we have this block which price has not been mitigated, there is need for price to actually push all the way to this level for this block to be mitigated. Okay, so that is what a mitigated block is. A mitigated block is an order block or a supply candle or a demand candle that price decided to visit again after a significant push from that area. So, and like I said, when you are marking out your POI, the ones that may tend to hold most is the ones that price has not yet been mitigated. These are the areas that you want to pay attention to. So when you are, irrespective of the strategies that you are using, whether you're a demand and supply trader, whether you're an ICT trader, whether you are smart money concept trader, or just any strategy at all. You could even be a support and resistance. What you just need to do is to understand what this mitigated or an unmitigated block represent. Because if you are trading support and resistance, you are simply looking out for areas where price tend to reverse from. And most of the time, what you will notice is, if you understand this concept of mitigated and unmitigated block, you will know that sometimes those areas you consider to be your support and resistance are always a liquidity pool. There are a bunch of liquidity, because when you have an area that looks like this, suppose this is a market, right? That is, probably trending to the upward direction, and you notice something like this. Now, one thing you will agree with me is that there are a lot of persons here that are actually making trade entry. So there will be a lot of liquidity around this region, because retail traders are actually placing order. When price came to this level. Some they made an order from here, they took a sell. Now there are also people that are actually putting pending order just above this guy here. Those people that are actually trading breakout. So their orders are always here, right? Now, what you will wait for is that these things are all liquidity, they are all money. So what you will notice is that institutions will actually ensure that this all of this price will come to this and push above it, take out all of these stop losses that are placed around here, and then take the order of those that are actually anticipating a breakout, because breakouts are going to put what do they call it, a price stop order above this level. So price will take them out, and then you will see that market will continue in that direction. Now, if market want to continue in that direction, most of the time, this price is definitely going to create that order block around here. It will create that order block around here, and then you will notice all of this huge volume candle that we followed after the order block has been created. But do not panic to, don't be quick to jump into a moving trade so that you will not injure yourself or get stopped out so quick. So what you just need to do, you already know from this video that yes, whenever things like this happen, there is always a block that is yet to be mitigated, and price need to come back to mitigate that block before continue in that desired direction. So what you just need to do is to figure out which area price has not really mitigated around this zone, and then anticipate price to come back for the mitigation. So that means you once price come back to it, you now have a mitigated block, and you can expect price to continue in the desired direction. So I believe this video is helpful. If this is your first time of view my content, kindly make sure you subscribe to this channel. All right. So please, there's a link in the description of this video, which is a link to our Telegram channel. You can do so where to join the Telegram channel using the link. We host free classes like twice in a week, or yes, twice in a week or thereabout. And we also send free signals there as well. Like today, we've already posted a signal. This is on the volatility 151s. Okay, so you can do so where to join the Telegram channel using the link in the description of this video. So this is where we'll be stopping. In our next video, we're going to give a live chart analysis of how you can actually use this mitigation block to make your trade entry. So we'll look at a top-down analysis, and we'll be able to spot where these phenomena are actually happening on the chart. So we'll be stopping here. In case you have any question regarding this video or any particular video you may want me to create based on this concept, you can actually drop it in the comment section. So don't forget to subscribe to this channel if this is your first time of viewing my content, and like this video so that you can help the YouTube algorithm to recommend this video to many more people to learn from this. All right, thank you guys, and see you in our next video. Stay blessed.